everyone. Thank you for joining in our dear NRI community. We welcome you all in the most awaited webinar of the year, which we have termed as Modi ji's gift to NRIs. You would soon know why we call it this way. As you all know, I am Mudit, founder of SBNRI, NRI focused wealth management platform. Um, we are really loving as Indians living in India to see our Indian diaspora creating so much value across oceans in the world and creating a name of India like we have never imagined. Most of the CEOs of the large companies are from India, as you all know. Just to give you a few snippets and thoughts about how much value have you guys created across the globe. The total NRI OCI PIO population is about 32 million, but they hold wealth equal to the wealth of Brazil as a country. So thank you for joining in, and we welcome all of you and expect that you love the webinar. We have with us veterans from investment domains, CBO from of Motilal, um, country head Motilal, and people from senior management team. But we'll go step by step on few things. But one request from all of you: A, just keep your video off, and whenever you want to start discussion or any Q&A, you can put on the chat, and keep your audios on mute, so that this is a simple and focused conversation between SBNRI and Motilal, right? So right now we start with why all of you would be wondering, why did we term this as Modi ji's gift to NRIs? I think there would be something why we are calling it as a gift. Before we start anything, I would want to know from all of you, what are few issues that you encounter while you are investing in India or you are investing in India. Please be interactive. It would be a fantastic conversation so that all of you would be engaged. I give you 30 seconds. We start our webinar now, wherein I would love to know what are those key issues. You can type in just that issue on the chat, and then I give you 30 seconds for this overall problems that you face, and then we start with discussions. Okay, I have already few points that people have started putting in. Sure, dual taxation, very nice. Just keep putting in. Fantastic, cool. I can see about seven to eight replies already. Again, a request: just please put your video on off. Um, okay, perfect. Sure. Fantastic. We have 30 seconds, and thank you for all the replies. I think, as I expected, the few problem statements that I could see is double taxation, taxation inconsistency, inconsistent policies regarding KYC, online enablement for all kind of transactions, too much documentation, which I would categorize under paperwork, response time to customer support, perfect, repatriation, of course, USA citizen, so probably an NRI not legal to invest in, let's say, few mutual funds. Yeah, absolutely. KYC. I got about 20-25 responses. Thank you for being a very active audience. But if I have to categorize all this, I think the three major problem statements that we figure out, and with all the experiences that we have in the NRI audience, interacting with all the NRIs across the globe on our YouTube channel, across our various channels, we have realized that these are the three main problems: taxation, paperwork, currency depreciation. And in addition to that, the whole process, like for example, people wanting, or people have to mandatorily keep Indian mobile number to keep that process on. And I understand that. So let's just keep it under documentation for now, which could be digital, physical. I understand. So documentation slash paperwork, taxation, and currency depreciation. Bang on. Thank you for being a fantastic audience. Now, just hold on to this thought. And I understand, while you invest in India, you have all these problems. We will now shift our thought a bit on what is this gift that we are talking about. Where is it? What is it? How can you be a part of it, right? And then we will do another interactive session wherein we would love to know from you that whether you understand what is gift or you know about gift, etc. But for now, let's just keep our focus on what is it about that we are talking today, and what is this gift city that Modi ji has introduced. Just a small agenda about what we are going to cover today, and then we move on to the next thoughts. So what is gift city? What's so special about it? How can NRIs be a part of it? And Motilal Gift City Fund, which Akhil and team would introduce us, and a bit of Q&As. So we start now on specifically talking about what is Gift City. With this, I introduce Motilal senior management team, Akhil, Shreyas, and Archan. And over to you, Akhil, who is the CBO and a veteran in asset management space. Thank you for joining in, Akhil. Over to you
Thank
on
you.
just a brief about you and the Gift City. Yeah.
Thank you, Mudit. Sorry, I got lost in between, so I missed some part of whatever you were talking. I'm sure you were talking good. So, good evening to everyone. It's lovely to see all of you on this call. It's a pleasure talking to you. A little bit about myself. My name is Akhil Chaturvedi. I'm the Chief Business Officer at Motilal Oswal AMC. I've been here now for over 12 years. And overall, I have now 25 years of experience in the world of asset management, worked with companies like Birla Sun Life in the past. This call is focused on the opportunities in the gift city, and then we've been one of the early entrants in the gift city. We've launched one of our products pretty.
Uh, I think we lost Akhil, is it?
I guess Akhil, yeah. Maybe we'll stand by for about 30 seconds. He should get back.
So, sorry, guys. He would be joining soon.
Sorry.
Akhil, I think you're on mute.
I'm back. Am I audible? Yeah, so we've seen some great success, and I've been traveling out of India now for over 10 years, trying to build our offshore business. But believe me, the kind of response I've seen in the last 1 year, over the last 8, 9 years that I would have gone, it's like 100x, right? So initially, when I was traveling and I was talking to a lot of NRIs and foreign institution investors, usually, the appetite for India used to be pretty low. We were going through our own ups and downs in terms of our economy, in terms of how the businesses and the stock markets were really doing. So as a destination, India was really not very, very attractive for many, many years. But more specific after COVID, with the way our economy has bumped up, thanks to all the reforms which have been done over the last decade or so. Our economic growth now is the fastest growing across any country, over 7% for the last 4 years. I think the momentum, what we are seeing of the economic performance coming into the corporate earnings performance has been fantastic. We have seen on an average Indian companies growing their profits over 25% across large cap, mid cap, small cap. And that has ensured that even if you look at India's blue chip companies, the top 100 companies have grown almost 2 times in the last 4 odd years. And the mid caps and the small caps have actually gone up 4 times, 5 times. I'm just talking purely about the index, right? Now, with all this good macroeconomic data points, good economy, stable currency, lower interest rate, low inflation. I don't have a presentation. My colleague will make a presentation. I'm just making my opening remarks. So just hang on with your comments, please. Yeah, so with the way our economy has done and the macro being very, very stable, our forex reserves are now close to $700 billion. We've seen, for a large point of time, we have seen our inflation in the comfortable band of RBI, which is 4 to 6%. And that has ensured that over the last 20 quarters, we have not seen any rate hikes. In fact, now that US has started to cut rates, we will see hopefully some rate cuts happening in India as well very soon. So very stable macros, very, very promising and encouraging micros, which is the earnings growth, which is the profit growth of the Indian companies. and phenomenal liquidity which is coming inside Indian markets, essentially from the local investors, because as you all know, the foreign investors have been selling out of the emerging markets over the last 2 years as the US interest rates have been moving up. So a lot of foreign capital has flown out, not because they don't like India, but they have gone out because they have better returns back home. Maybe that is momentarily, and as the yields in US will fall down, we will see a lot of money coming back to emerging markets. And even if you look at the emerging market MSCI emerging market index, Indian allocation has gone up from 7% to 22%. So now, whenever this money comes back, the FII money, I think we'll see several tens of billion dollars coming inside India purely because of the allocation going up 3 times. But normally in the past, what has happened in India is that uh, for for several decades, Indian investors used to follow what foreign investors used to do, at least till the early part of this decade. So when FIs used to come into our markets used to go up, and then the Indian investors, the local Indian investors used to come into the markets. And when the FIs used to go out and markets used to start to correct, then the Indian investors used to move out. Right. Now, what we have seen is a complete different trend with all the work which the industry has done. I think the Indian investors have now understood the power of equities, power of compounding, and that if somebody has to make like 2 times inflation or a few hundred basis point more than the more real return, then you have to willy-nilly allocate more allocation towards equity to ensure that you can add or you can compound your purchasing power in the next 10, 15, 20, 25 years. So we are seeing a definite shift in the way Indians are allocating to equities, which is reflecting in the way the mutual funds have grown. Within mutual funds, the systematic investment plan, the SIP book has grown. We have seen that over the last 2 years, almost 3 to 4 million new demat accounts which are getting opened, and so a lot of investors are coming into markets directly. And then many other products like PMS, AIF, and now like Gift City. These kind of vehicles are also attracting a lot of capital from Indians or non-resident Indians. So the markets are very healthy in terms of liquidity, and even in bad times when the news has been bad, like for example, there have been 2 wars. In fact, we are living in a situation where there are 2 ongoing wars. We have had the US election completely. The kind of results which have come out there. We've seen elections in India. We've seen a budget where capital gain tax has been hiked. We have seen the yen carry trade play out, and many more events in the last 4 years. Despite that, Indian markets have performed well, and they are in the top 5 markets in terms of the returns. I think all of this put together is now eventually building a lot of confidence in NRI community, which I can sense when I travel abroad, and also in terms of the investments we are receiving in our fund. We are getting a lot of inquiries from Japan, Korea, US. Europe to set up vehicles in these markets to get the institution money from there. So a lot of demand, and we are trying to see how we kind of capitalize on this. Now coming to giving this context, coming to Gift City. Now Gift City is nothing but it is an initiative which was taken by Mr. Narendra Modi whilst I think he was still the chief minister somewhere 2011, 2012, to set up this Gujarat International Financial Tech City, hoping to attract a lot of foreign capital in the financial services sector in India. Now, obviously, it's been over a decade since this concept was kind of introduced, and then going through all the legalities, regulation, all of these things took some amount of time. But in the last 3 years, we have seen finally we have the entire financial ecosystem which is present in Gift City. Uh, so whether you talk about the public sector banks, we have over 25 public sector banks which are in Gift City. All of you who are outside India, who are NRIs, can open your accounts, dollar accounts in Gift City. If you have a Bank of Baroda, you can just simply extend your account into the Gift City branch. We have over, I think, about 15 fintechs which are operating out of Gift City. We have two large indices which are operating from Gift City, a lot of brokerage firms. We have custodians. So entire spectrum of the financial services businesses now is available. We have now multinational banks also which are setting up their branch primarily to cater to the NRI community, right? So. And in the recent past, we have also seen asset management companies like us. So Motilal, and recently we have seen Mirai, we have seen HDFC, I think Nippon also. Everybody is planning to set up their shop in Dubai. Sorry, in Gift City. Right now, given all of these things in context, we feel. Like I said, that we introduced our first fund, which
Okay,
is
Akhil, just a
Motilal.
question here. Sorry to cut you down. Just a question here.
Yeah.
So you mentioned pretty so in a very clarified and simplified way on the macro of India, very well taken, and then about the specifics of why Modi ji started Gift City, what's the objective of it, etc., etc. And then we basically can think of it as a financial service, global financial services hub out of India. Now coming to the next point, and I've heard you many times in explaining it very wisely and very simplified in a very simplified manner as to how does it basically sort of simplify the paperwork, say so to say, or the currency depreciation part. Can we put a slight highlight on it just on an overall gift city basis, and then probably we can move to the Motilal part. It would that would give a good sense of overall thought process to analyze.
So certainly, like I said, there are far many operating or operational efficiencies when it comes to Gift City. Whereas while you want to open your bank account over there, I think it's pretty smooth. Not that it may not be smoother in your home country, but whichever, if you want to open your brokerage account, the process is very simplified. Less documents. We don't want PAN card. All of these things are not required. It's
Sure.
akin to opening your account, whether you are in Middle East or UK, US, wherever it is. You just have to give your essentially, anybody and everybody is trying to look at only your KYC proof, which is your identity proof and your address proof, right? So
Right.
for individuals, for non-individuals, it will vary. But I can tell you with experience that the paperwork for opening any of the financial services accounts is very easy, right? So
When
documentation
compared
certainly
to, let's
easy.
say, NRI, sorry, when compared to whenever they are managing the INR set, so to
Yeah,
say, NRI and
yeah,
NR
yeah.
account.
Yeah.
Right.
Now, what I've
Got it.
seen is what I've seen is so I was trying to build a point that of course opening a bank account is pretty easy. You want to trade in Indian markets using your dollars. Opening a brokerage account is very easy. I mean, we have individuals on this call, so let's look at products which are there for individuals, right? So I'm not getting
Right.
into custody and all of those things.
No.
So you want to come directly to equities, opening a stock market, a stock broker account easy, opening a bank account easy, link it up with each other, and you can transact very efficiently, right? Most of the bankers and the brokers are offering you online facilities and all the facilities which is easy for you. You can sit anywhere through your mobile app. You can transact anywhere, right? And I'm talking more from outside money coming inside and not inside money going outside.
Correct. Definitely.
Now come to asset management companies. I think there are two clear highlights why we decided to eventually launch our fund while we had the license in place. But two things which IFSC, the regulator, relaxed for the NRIs. Number one, any geography, if in NRIs had to invest into a offshore vehicle investing into India, the NRI limit was capped at 49%. Right
Sure.
now, it was very difficult to have a fund in a Mauritius or Singapore or any other jurisdiction because if the fund overall limit hits for the NRIs at 49%, incrementally we cannot take any money. So scaling up the fund used to become a very big challenge. Most of the jurisdiction and the most preferred jurisdiction was Mauritius. Now, Mauritius itself has been through a whole bunch of regulatory hurdles. They have been part of the FATF, then they got out of it. They themselves, the regulator themselves, keep changing the guidelines. Like all of a sudden they introduced that single investor limit should not be more than 25%. Now, all of these things become roadblocks to which basically limits you to growing your fund, right? The third thing is that in one of the category of funds, if you launch, which we are planning to do, which is a second fund, if any asset manager launches a feeder fund which is investing into Indian mutual funds, it is actually exempted from any capital gain tax.
Got it.
We are planning to file that, and there are other my friends from the industry are also have already launched their products. So you invest into this fund, which is domiciled in GIFT City. You invest your money. The fund will then in turn invest into Indian mutual fund, and when there is a redemption from the Indian mutual fund back to the GIFT City and back to the investor, there is no tax liability, none whatsoever in terms of capital gains. Now, if somebody is residing in the GCC countries where the tax is zero to very, very low, eventually gross return is equal to net return. Your net saving almost 20-25% of capital gains, which straight goes right into your wallet. Now, if you're residing in UK or you're residing in US, where this issue of giving you a K1 and all of those things are also gone. Now you have to pay your home country tax. There is no tax at the India level or at the GIFT City level. I think that is this. These are some of the things. I think removing the 49% limit, removing the single investor limit, and for a feeder fund, removing capital gain tax. I think these three things are really game changer, and which is where we are seeing a lot of people setting up their shops into India. So now, if you just kind of sum up more from your investment decisions. Typically, what I've seen in NRIs is that you have a NRE account, you have a NRO account, and you have a dollar account. Now, all this while you were using your NRE, NRO account to basically invest into the Indian mutual funds or Indian PMS or Indian AIFs. Right now, I felt that that was a limited kitty of the NRI which was there in NRE, NRO account. There is a large pot of all of you which is also into in dollar terms, which is parked in dollar terms, which probably all this while was getting invested into vehicles which was outside India, probably US, probably Europe, debt funds outside or whatever you may say, but you were doing that all outside of India and not able to participate with your dollars into India, right? Now, with the fact that Indian currency is one of the best perform, not that we have not depreciated, but the rate of depreciation is much lower than compared to any of the countries globally except for Russia and Canada. I think India is the third best performing currency. So the fear of losing your return because of currency depreciation is broadly, I would say, put to rest. Now, there was a time when Indian currency on an average over a decade or 2 decades used to depreciate by 4-5%. The likelihood of the currency to depreciate now is more like 1.5-2%. If
Sure.
not, if not appreciate.
Sure.
Okay, so I don't know, once the foreigners come back, if they bring 100-200 billion dollars, you might be in a situation where the currency actually starts to appreciate. So, but currency is something which I'm not an expert of, and I don't know. It all depends. And these days, how the dollar index is going up currently at 108, and there are all talks of going to 116. So maybe we could depreciate a little bit more further down. But RBI is doing all its level best to ensure that the stability in the currency is there. So I would say long-term 10-year picture, I feel the currency will be very stable. Indian macro picture is looking very, very promising. We are looking at doubling our economy in the next 7 to 8 years time frame. And if you say that the country will double its GDP, let's say in the next 8 years time frame, I feel bare minimum our markets will double in 7-8 years time frame, right? So a 12-13% compounding, nominal rate compounding of Indian GDP will result into at least 14-15% compounding of the stock markets,
Sure.
right?
Okay, just to
So
join
India,
here, one
sorry,
thing.
yeah.
Actually, people have few very basic questions which I just wanted to address, and please add on. I would just answer also. So the main questions are basically related to what actually is Gift City A, and I'll just answer them in a short while. So this is a city basically. A location is basically half an hour from Ahmedabad in Gandhinagar. It's in itself a whole physical infrastructure where a global financial services hub is created. by the government of India for attracting, let's say, foreign investments in a very, very simple term. Now, what happens is there are infrastructurally possible scenarios where you can open your foreign currency account, and the rails are now set up, which Akhil was explaining. Multiple rails. When I say rails, what does rails mean? That basically means that you can open your bank account in GIFT, which is not an INR account. Let's say it's not an NRI NRO account. It is not. It does not come under India jurisdiction. It comes under GIFT jurisdiction as a whole. Altogether different regulator. Altogether different account. Now people are asking that if we are opening that account, then what is the benefit of opening that account compared to an FCNR account or a an RNR account? Now you just have to think of it like this. It's your foreign account. It is not related to your NRNR account. FCNR basically are FDs. It's not even an account. But in case of, let's say, a center called Give, where you are open a bank account, through that bank account, imagine like a USD bank account, which helps you invest in India, which solves your currency depreciation problem basically. Now, what government has done or what GIFT regulator has done with all these fantastic asset management companies and banks coming in, they can take money in your currency. That solves your currency depreciation problem. A. B. When you open a bank account there or any such scenarios, you don't have to give your PAN and multiple other things which you will realize when you do it. So paperwork becomes relatively simpler. B. Now C, on taxation, what happens is whenever you invest by NRE and RO, what happens is you have to take care of India taxation as well and foreign taxation as well. You have to file at both ends, correct? Now what happens when you do it via gift? What gift as an entity or let's say as a setup tells you is it's majorly not related to India. So any earnings that you do in gift, you don't have to file taxes in India. You have to file taxes in your own geography. That is true. For example, for any country whatsoever, and Akhil had mentioned it, I will just reiterate it for the benefit of people at large. Say US, UK, GCC, Singapore, wherever the NRIs are from. Whenever you invest in gift, and let's say some earnings are done in that gift fund where you invest, you don't have to file any taxes as of now in gift or in India, because at a fund level it will be tax free. So wherever you file, imagine it's tax free. The fund might pay the tax depending on whether they are investing into mutual funds or AIF or PMSs of India, but you don't have to worry about it as an NRI. What you have to worry about is for example, if you put in $100 in gift and you earn $5 annually, so you get $105, let's say annually, unrealized, realized, depending on whatever your jurisdiction is. Depending on that, you will basically be, come under that particular taxation jurisdiction. For example, if you come under GCC, which is, let's say, Dubai, for example, in UAE, you earn on $100, $105, which is $5 in earning. Now, GIFT says that you don't have to pay tax, so that's fine. Gulf says that you don't have to, pay tax. So you have tax-free $105 after a year. This is what we mean by a tax-free so to say jurisdiction, tax-free from a mindset of India. So whatever money you were deploying, let's say in INR, by first converting that into INR from your currency and then investing into India via that currency via NRE NRO accounts, and then filing taxes in India, and then on that double taxation, if you want to basically take a certificate and don't just pay the differential in your own country, all these things would be very, very relatively simpler. Coming back to my initial pointers, three major pointers that we had spoken about: paperwork, taxation, and currency depreciation. Now you definitely have multiple questions, which we will definitely take at the end of the conversation, but I don't want to diverge from the thought of just introducing as the next process. So this is gift. This is how we have structured it. This is the macroeconomics. Just a 10-15 minute on what Motilal has done as of now, because that will give you a very good sense of how they have established and what are people seeking from that in terms of returns from India, in terms of processes, how can you become a part, and then we will definitely focus on other questions that you have typed in on the chat. Yes, over to Akhil again.
Mudit, I think the audience is getting a little impatient to understand about gift and all of things. So just relax, guys. We are all here. We'll take your
Yes,
questions.
sure.
See, we are part of the asset management company, so we wanted to give you a picture of Gift City, the kind of things you can do there, and then what is the opportunity when it comes to your savings. Now, both Mudit and myself have given you a brief picture of what the vehicle looks like. What I will do now is invite my colleague Shreyas Mantri, who's heading our private banks and wealth space, and he and his team has been instrumental in raising over $100 million into our Gift City fund in the shortest possible time into this great product which we have launched. So have a look at the product. He will also explain to you the operational modalities and the taxation modalities, both for our existing fund as well as our new fund. The India part I've covered, and then I think most of your doubts should be clear. Still, if you have doubts, Shreyas is available. He'll take it over. So I'll hang up here. Mudit, thank you so much for inviting. Thank you so much, everyone, for bearing with me. Look forward to a good conversation between all of you. Thank you so much.
Thank you,
Bye
Akhil.
bye.
Thank you. Yes, over to Shreyas. Yeah.
Thanks, Pudit. Thank you everyone for joining the call today. So quickly, to take the conversation forward, we've created the first, one of the first Gift City products. A lot of unique things for most NRIs, and I'll spend some time explaining, the opportunity, etc. This is broadly the house. These are all the managers which are involved in the whole process. Right on the top is our senior management. Ramdevji is the chairman of the EMC. Pratik is the MD CEO. There are two CIOs for different set of investment vehicles. Akhil is the CBO, of course, and Pratik is the passive investing head, and a whole host of fund managers available managing different strategies. Now, broadly, some of you may be familiar, some of you may not be, but broadly, we manage about $14 billion worth of equity assets in the country. We are the largest player as far as category 3 of AIFs are concerned. All these products are rupee denominated, of course, and our rupee business has existed for a long period of time. A lot of people effectively sell us. One of the big features, or one of the big benefits of investing with Motilal Oswal Asset Management Company products is that our own promoters have invested close to $1 billion of their own money in our funds. That is very, very unique to Motilal Oswal. So think about it. Broadly, about 7-8% of our AUM is really owned by our own promoters. Investors have all kind of pulled in rest of the money. We follow investment philosophy, but I guess today's session is not to understand a lot about investment philosophy. We'll kind of I'll quickly speed through this slide, this section for you all to get a sense, and we of course then move on to Q&A. So, broadly to make money in India, you broadly need good quality companies. You don't only need good quality companies, but you need companies which grow, and which don't grow for 1 year, 2 years, etc., but which grow over a period of time. So hence longevity of growth becomes very critical. And ultimately, you may have a good company, you may have a company which grows, and you may have a company which grows for a long period of time. But if you overpay for that company, we have trouble. For an extended period of time, you may not be able to make money despite the business doing well, right? We've had several such examples throughout the life of the Indian equity markets. For 10 years, good companies continued to do well, continued to see growth, but the stock prices didn't move at all. We have a whole host of risk management processes. One of the two important points that I would like to highlight, broadly, all our portfolios have up to about 30 stocks. 35 stocks is what we really have across the board. We follow risk management amongst many other parameters. Most of our exposure in individual stocks ranges between 2 to 9%. Anything higher than 9, we start trimming and reducing exposure. Anything lower than 2, either we are exiting or we are building positions, or maybe it is because of passive drift that allocation looks fairly lower. So we are very crisp, growth oriented investors. So if you are interested in investing money in growth oriented investors, Motilal Oswal is one of the places to kind of allocate your money. Now, moving on, I'm sure when it comes to an equity or a investing session, everybody is curious to know where are the spaces of growth? What are the ideas, in our mind? While Gift City Fund itself is a big idea, but broadly, the places in which we find a lot of growth, we find longevity of growth are right in front of your screens, right? China plus one, we very well know the big chemical trade which has been playing out over a long period of time with Donald Trump being elected as the president. The anti on this trade, the decibel levels have only increased. Electronic manufacturing is very, very big, and there is a whole host of Apple ecosystem which is getting created in India, a Samsung ecosystem, and several other players are effectively creating their ecosystems out here. Make in India is again big. EV as a space, is a very promising opportunity. Now, within EV, I mean within auto, you see the adoption in two-wheelers. It seems to be the fastest in India as we speak, right? Four-wheelers is taking time. Maybe three-wheelers are the next to completely move EV, but that's the kind of opportunity in that space. Auto ancillary and power. Within power, we like a lot of alternate energy plays, right? Traditional energy, we know fossil fuel, there is this whole sentiment against fossil fuel. However, fossil fuel per se may be necessary till we transit. And those transition stories is what we appreciably like. Financials, I think it's a big sector. Practically 36% of the listed universe is financials today. Within that, NBFC like of plays is what we are invested in. Tech services, new age businesses. Anyone who's visited India over the last 2-3 years may have heard of names like Zomato, Swiggy, Nykaa, Zepto, Policy Bazaar, and several such places, by platforms, which are asset-light models essentially. Broadly don't own any large assets, and effectively are intermediaries between the brand and the consumers. So new age tech is a very big promising theme. High growth tech companies broadly in the mid space is what we like. Urbanization, I think post COVID, there is one thing which is very clear. The recovery continues to be K-shaped. So for a certain set of people in the society, the progress and wealth effect has kicked in materially. But for a whole host of others, it's not necessarily been very, very hunky-dory, although, a lot of it has recovered. But anything to do with urbanization, anything to do with premium consumption is where we find spaces of opportunity. Telecom is a fairly recent addition. There have been tariff hikes. You all would probably know that India provides the cheapest, data plans in the world. Right, broadly, someone was telling us it is some 50 cents for every GB, which makes it the cheapest in the world. And of course, telecom industry is consolidated. Broadly, there are about 3 or 4 players from about 7, 8 players which used to exist, and now tariffs have started rising. So telecom is a promising play, and within that, aside of that, healthcare ecosystem in the form of hospitals are very, very big. So these are some of the places where we find quality, where we find growth, longevity of growth, and where there are ideas in places where you don't have to overpay. Not everything is available cheap. We don't necessarily buy cheap. We buy things where there is growth. Is the point all of you should remember. Quick slides on how the first half of earnings season shaped up. Broadly for Nifty 50, right? Earnings growth was broadly in line. Variation as far as analyst expectation to reality was just about 1%. See, here is where I want to make an important point. See, the stock market is a very efficient machine. Okay, it already predicts what the earnings are likely to be. Now, stock markets react either positively or negatively to any uptick in earnings or downtick in earnings. So, to give you a case in point, let's say you expected earnings growth of a company to be about 15%. For some reason, the company actually delivered 20% earnings growth. So that is a positive surprise for the market, and hence, in such a situation, the stock price is likely to move up. Likewise, for a downward surprise, the stock price is likely to move down. So it's a very efficient way of discovering, prices. And broadly, you see, the earnings slowdown, which is the headline of today, was expected. All of it was pretty much in line with analyst expectation, right? While mid caps there was a bit of surprise, small caps there was a bit of surprise, they were below expectation, but and you've seen a correction in that space. However, with our own portfolio companies, right, the picture has been very, very different because we are growth investors. We like to play growth. So some of the names, which are broadly, held in even the Gift City portfolio, the earnings growth has been very, very good. In fact, two or three places where we were honestly disappointed, but aside of those two or three places, everywhere else, earnings has been very, very robust.
Sure.
Ultimately,
There's one point here. I would like
yeah,
to just, while we understand that, Motilal has a phenomenal experience, and the way you choose the company, you choose the sector, definitely. Can we now throw some light on like the gift city part of it, like
sure.
what's the experience there? I think I understand that, and we can go. If you have specifics on specific USPs on this note, I think just continue. If you think that you have sorted the overall picture down in terms of how do you select the companies and the overall thought,
Yeah,
then I think better would be if we can move to our gift fund. That would
yeah,
give them a good sense of how do we do it. Yeah. And
sure. So,
just final point on
perfect,
it.
perfect.
While you are
So that
explaining,
you quickly to transit into the gift city offering. So the way we manage money is very unique to us. Broadly all our funds across the board are doing very, very well. Vis-a-vis competition as well. On a 1 year basis, most of our funds are at least 15-20 percentage points higher than everything else. Is the limited point, and we'll of course do it through Q&A. Now the gift city offering, right, which is what all of y'all are interested in. So ultimately, you see the fund is a vehicle. The vehicle is going to make some investments. So I've told you the post part, what the vehicle will do, how will it invest, etc. But broadly, we've set up a trust within Gift City. It is called Motilal Oswal Alternate Investment IFSC Trust, where we accept money from investors. Now, the way you kind of transact, and I'll go into the products in about 30 seconds. The way you kind of transact is, using any dollar account of yours or any bank account of yours, you effectively remit money. There is, of course, a sign-up process. There is documentation. I mean, there is a form, etc., to be filled. Basic identity proof, address proof needs to be submitted, and you can simply wire the money into the bank account which is held by Motilal Oswal Alternate Investment Trust in Gift City.
just a point, just a question here. Uh, would that basically mean they just open the account first, let's say with Motilal Oswal brokerage, and then they open the account and then they can wire it via the Swift network or specifically any network that is being right now built as payment rails?
Right. So you don't really need a brokerage account. You simply need a bank account anywhere in the world. You
Got
may
it.
have a bank account in Dubai, you may have a bank account in any country. As long as the bank account allows you to remit US dollars out of that account into the Motilal Oswal Gift City account, it's fine. No other account is really needed. No broking account, nothing is needed really. Right?
Got it. And when
It's
you say
just
gift
like
city account,
making,
that is with the partner bank that you have.
pardon, I missed your question, Mudit.
When you say the gift city account, does that mean the partner bank that you have, or let's say an account with you?
Yeah. So what I effectively mean is, this trust which we formed has a bank account. We have a
Got it.
specific bank
Fair enough.
account, right? So if Mudit is the investor, Mudit simply wires $150,000 into this account to effectively initiate an investment.
Sure.
So
Makes
since
sense.
this is a trust, all the investors pool in
Pull in.
money into this trust is the method.
Got it. Fair enough. Very well
The
understood.
good part, and I saw a lot of questions while Akhil and Mudit were speaking.
Right.
The big USP of GIFT, there is no India-based KYC norms to be followed. So
Right.
you don't have to bother about having a PAN. You don't have to bother about Aadhaar. You don't have to bother about complying with the SEBI-based KYC, which is typically applicable for rupee-based products. A
Got it.
simple identity proof, globally accepted. A simple address proof, again globally accepted. If you are investing as a business, general undertaking on source of funds is all that we broadly need. Of course, with different types of entities, there can be more documentation, but I'm just simplifying for individual investors. Very smooth, very simple, and fairly hassle-free to kind of make an investment. The other big advantage of Gift City is when you invest in India using rupee route. Let's say you want to buy a portfolio management service, or you want to buy an AIF fund. There is a tax incidence of GST. So typically the management fee is 2.5%, GST is 18% on top of that. So your cost of investing is broadly 3%. Now this GST is waived in the Gift City for about 8-9 years. So you are straight away starting with a 45 basis point advantage if you come via the Gift City.
Fair enough.
Is advantage number three, I would say. One is you can invest in dollars. Second is
Just a question here on the dollars point. A lot of people have this doubt that whether can they invest in their own currency like AED, JPP. When you're saying dollars, it has to be dollars, or you go across currencies.
so at this stage, at most funds accept money in USD. So we
Sure.
will accept
Sure.
in USD and we will remit back in USD.
Sure. Sure.
Yeah, that's the setup at this stage. And as you heard, broadly, Gift City, while it has existed for a long period of time, the regulatory authority, which is IFSCA, put out its regulation only in 21-22. So all licenses effectively started getting granted, activity started building up very recently. Hence, a lot of you may not have heard about Gift City. We are amongst the first ones to actually raise $100 million in a span of about 4 months, like Akhil mentioned, right? So a lot of advantages to effectively come in through the Gift City route. And I'll quickly, spend about 2-3 minutes on the product construct, and we'll then open it up for questions. So broadly in India, other than investing for growth, Ramdev Agarwal, who's the chairman of the asset management company and the founder of Motilal Oswal Group, created a wealth creation study. And he tried to identify cohorts of businesses which consistently make money, which make largest size of money, and which make like a very steady state kind of outcome over a long period of time. One of the things he noticed was founder run companies where the promoter is still active, large skin in the game, maybe 25-26% plus holding. These kind of companies do very well in India. As you know, India is not a simple market to maneuver, to do business in. A founder being in control has that much more advantage. So broadly in the fund, we start with about top 500 companies. We eliminate companies based on promoter holding, while we still keep companies with low promoter holding but high employee stock options to the top management in the universe. We don't exclude them. Then we eliminate companies based on profit before tax being broadly about 100 crores. We eliminate companies based on capital efficiency. This can be a little technical, but I'm happy to address it during Q&A. Then we apply the QGLP process, which I spoke about, and ultimately we, boil down to a portfolio of about 20 to 30 names. Now, these 20 to 30 names are not bought at once and we hold on to it forever. Risk management comes into picture, right? All our stocks typically are about 4-5%, 6%, 7% allocation in the portfolio. we trim, there can be mistakes we make, so we exit those stocks. So broadly, it is a very actively managed, portfolio. I'll skip some of it. Broadly, about $100 million now, not in pipeline now, commitments received, money in transit. Fund has done very well, since inception. So basically, this IFSCA fund feeds into an India-based fund run by Motilal Oswal called as Founders. And this fund, was launched about 2 years ago. Since inception, the fund has done about 54% versus the index of 29%. It's a huge 24% outperformance. Of course, we are not designed to do a 24% outperformance. It just happens in the life of asset manager that, a lot of your allocations effectively fire and do very well for you. But given our thought process, given our metrics, we believe that we are typically designed for consistent alpha over the index, is our position. So think of growth style investing, think of Motilal Oswal. Think of Gift City, think of Motilal Oswal. Think of founder based investing, think of Motilal Oswal. And the added advantage, founders broadly, we are about founder strategy, which we run in India in terms of rupees. That itself today is close to about $1 billion. Out of the $1 billion, and I'll now use rupee here to make it slightly convenient, but about 8,400 crores worth of commitment raised, out of which 800 crores belong to our own promoters. So you have a founder-based portfolio, and you have our own founders who have put in substantial amount as skin in the game. So, it's a great proposition for most investors. Generally, these are the portfolio companies, like I told you, power and energy, a lot of alternatives. You will broadly see two names in financial services. While it is tagged as reality from our perspective, this is premium consumption. There is a e-Mudra, which is basically office automation play. A Mothersons, which is an EV and auto kind of play. Titagar Wagon, broadly, is a name which you may not see for a long time in the portfolio. And within manufacturing, we have a lot of names, right? Some defense names in the form of Zen, PTC, couple of chemical names, cable wire companies, and EMS plays in the form of Dixon and Case Technology. In consumer discretionary, like I said, we are very, very gungo on new age businesses, premium consumption. So you have a jewelry business. Radico Khaitan is a liquor company. Trent is similar to Zara. Just for simplicity's sake, I'm saying Trent is similar to Zara, but has a lot many parts to it. Zomato, I think, is very popular. And yeah, broadly, that's the construct. Well, I'll kind of stop sharing my screen here and hand it back to Mudit to moderate questions.
Sure. Fantastic. I think a very good, insightful thought process, Shreya, on what we are building here from a Motilal Oswal perspective and then an overall gift perspective. I think there are still many doubts that people have, but I would only be able to take a few. And I think I understand that while you will have a lot of doubts, you will definitely take it up offline, when you would be interacting with, let's say, the SBNRI team. But for now, to simplify the context, I think one important thing that people have as one of the doubt is, and I heard you from a Motilal Oswal perspective again, saying that what is the kind of process structure of tax from a US based NRI versus a non US based NRI, so to say. I heard someone, from Motilal saying that probably you are also, giving a K1 while they can submit the tax there and stuff, and you have approvals from US versus how do we see it from other country perspective whenever they are investing? So, in short, like how can they see of taxation whenever they basically think of investing into Motilal's fund?
Okay, so I'll break this into two parts. I'll talk about the taxation at a fund level, and then I will talk about taxation at a individual investor level. Yeah, at a fund level, since we run an active strategy, which means the fund itself buys all the stocks, there is long-term, short-term capital gains which apply to the present GIFT City fund that we typically do. So anything greater than 1 year is 12.5%. Anything less than 1 year is broadly 20%. Now, the fund's NAV, when we make a payout, adjusts for the long-term, short-term capital gains. So for the end investor, on redemption, whatever you get is tax paid. So there is a tax paid at a fund level. Now, this is where I will bring in individuals into picture. Now,
Sure.
think of an investor who has come in from US. Now, US
Mhm.
has a very peculiar, taxation norm. Hence, to make life simple for all of y'all, we will issue a K1 certificate, effectively classifying the gains, long-term, short-term, where we've paid tax, where we've not paid tax, etc., which you can use, with your tax consultant to effectively, discharge your tax liabilities. For all other countries, NRIs from all other countries, again, K1 is not really applicable anywhere else. But for people in Middle East, this is basically tax-free. The second vehicle which we launch, Mudit, where we will not buy securities directly, but we will buy our own mutual funds. And as you saw, our mutual funds are the top rated mutual funds in the country. Performance-wise, star rating, whatever you pick, morning star rating, value research rating, top of top. When we launch this fund in January, even the underlying short-term, long-term capital gain tax doesn't exist because we will buy a fund, and the fund in turn is buying securities. At the mutual fund level in India, the trusts are exempted from paying tax. So this will really be a game changer for a lot of your investors, because the tax liability effectively comes down. So the feeder in mutual fund is a must vehicle, right? You will have more diversification. If your clients want a focused kind of a strategy, they should come into the founders based strategy. If they want to just simply come into a more diversified strategy, the second one can be a good option for your investors.
Sure, sure. So very well put on the taxation part. I think applications for individuals from Australia, again, very similar. You think of it like you don't have to think about India at all. Whatever you are earning in India, your tax is being taken care of by fund. And in your own country, whatever capital tax, capital gains tax applies, that is being applied. But one very important thing, and please, Shreyas, correct me if you want to add on this. Let's
Hmm,
say if an Australian NRI, let's say, put 100 Australian dollars with, or whatever, 100 USDs
hmm,
into Gift City's trust as a fund, then the fund pays, let's say, 12% in tax. Just an example,
okay.
right? And
Okay.
in Australia, the capital gains taxation on the earnings of let's say the capital gains is, let's say, 25%. And the fund
Uh,
has already paid 12% in India. Then in
hmm,
Australia, you basically, the fund will basically give you a report which says that they have paid 12%. So you only have to pay the differential because we have a double tax treaty with Australia also as India. So you will have to pay 13%, which is the differential of what you have paid in India and what you have to actually pay in Australia as something that you have to pay there, right? Shreyas, correct me if there is some disconnect.
Yeah, so Mudit, you are the NRI expert. We are
Absolutely.
just money management
No,
experts.
I'm clear
So
on that. Yes, sure.
yeah, yeah. So obviously, the taxation far better than us. We will
Sure.
effectively tell you what we've done here in the gift city, and
Absolutely.
most places where there is double taxation, treaty. I mean, avoidance of double taxation treaty,
Sure.
you effectively pay differential.
Bilkul, absolutely. Perfect.
Yeah.
Yeah. Same with UK, same with Australia. Whoever is asking from across the globe, I think very similar, depending on your local jurisdiction. Whatever taxation laws apply, we will, adhere to it. While you would be, working by us and any such doubts when you would be doing it, we are always available. Definitely, we won't be able to go in depth as of now, considering the time. But yeah, I think we will cater to that. In addition to that, I think. Just looking for any specific questions that I may take now. Yeah, another question that people were asking was, why is it 150K as of now? A and
Hmm.
B. You mentioned that you would also want to have another fund of yours where you would then feed into mutual funds. Right now, I think you're not feeding your investments into mutual funds. You're feeding it into either, I think, AIF, so to say.
Directly stocks.
Yes, direct stock. Okay. So that is why there is no tax exemption at fund level also. But so there are two questions. One, would this 150K gonna be reduced? A, and B, when you get to a feeder fund which is investing further into Indian mutual funds, whether that would be tax free at fund level also? So two questions.
Got it. So yeah, broadly, I'll answer the second one first.
Sure.
So tax is in the second route where we are feeding into a mutual fund scheme. At
Sure.
all levels, it basically becomes tax-free up to the fund, meaning the fund is investing into a mutual fund, the mutual fund is buying stocks. There is
Oh,
no capital gain at the level of mutual fund because there is a special status mutual funds enjoy in India. Right? So at that level, there is no taxation at all.
one
Even
question.
when the
So
fund itself,
this is implied specifically from this gift city route?
yes,
Okay,
for the gift
perfect.
city. Yeah,
Sure. Sure.
yeah. So,
Hmm.
that's as far as the feeder is concerned. And sorry, what was the first question, Mudit?
Uh, yes. Are we gonna see reducing the minimum ticket size, which is let's say 150K
Yeah.
USD as of now?
So, at this stage, basically, IFSC has adopted all the broad rules from SEBI. So, to invest in an AIF, this is a
Sure.
AIF vehicle.
Yeah.
Like to like number is 150,000, $150,000.
Correct.
As such, we don't see that changing.
I
Right?
see.
Maybe newer vehicles may come in, and newer vehicles may be able to bring it lower. But at this stage, that seems to be the minimum investment threshold. But the good part is once you achieve the $150,000, you can simply keep topping up or adding investments at your will. Then there is no minimum once you
Sure.
cross that threshold.
And this 150K, one has to put like, one time, or they can put in a staggered manner, say within 12 months, 6 months, whatever.
Yeah,
Sometimes
yeah. So first 150K have to come in together.
I
And
understand.
balance can be staggered, however one wants to do it at your convenience.
I understand. Perfect, perfect. Got it. Um, sure. I think one last questions if I could have from the users. Yes, Camp. I think on tax we will definitely discuss, and I understand
Yeah.
Mauritius, UK, everywhere the taxation is coming in. We will take a separate taxation session for all the users here. Definitely, please give us time on that. I know that you want to understand your double taxation part as well. We will do that for sure. Hmm. Yes. Any other question, okay, another question that has come specifically, I think, from can I use ISA stock and share account? So this is from a UK based NRI. If you know of ISA,
Yeah.
ISA basically.
Yeah. Yeah.
Yeah.
Uh,
Can I use ISA stock and share account in UK, or we only need India account? Hmm.
so we don't need any account. The fund, if you have invested in any rupee-based instruments, either a mutual fund, PMS, AIF, this is exactly the same. You
Hmm.
own a bank account, you simply transfer the money from any bank account you own to the IFSCA fund of Motilal Oswal. Okay, no separate bank account is needed. You don't need to open a demat account. You don't need to open any trading account of any sort. The fund will do all the activities, investing activities, and stuff like that. Whenever you so feel, of course, there are exit loads and things like that, which I'm not complicating the topic. But keeping that aside, whenever you need the funds, you can basically place a redemption. Once you place a redemption, the money will be remitted back to your own bank account. Now, if let's say you have you have a ISA account for stocks or whatever, there will be an underlined bank account. So you don't have to come through the UK ISA account or whatever. You simply remit money from the bank account. You of course have to do some sign up formalities as far as investing in the fund goes. Submit proof of identity and proof of address, and that's about it. And we get started. It's pretty simple. You're on mute, Pudit.
Sorry. Sir. Yeah,
Yeah.
fantastic. I know that there are multiple other questions, but in the interest of time, I'm really sorry for all the users who attended, and might not able to take the next questions, but we have a very interesting view for you. We have created a very simplified report on understanding what Gift City is. Yes, so just scrolling it for now. I am sure whoever has registered would have received it. Once now that you have the webinar that we have done, you will now be able to understand and appreciate what is written from a flow perspective as to why it started, when it started. Just keep scrolling. What is it? How much money has already come into the Gift City as an institution? What was the vision when it was created? I saw a lot of questions between that, what is happening there in 10 years, this, that. You will get to know a lot of it. What are the benefits? What are the non-benefits? What different type of financial institutions that exist in GIFT? Who is the regulator? Then what are the total numbers? What are the banking assets, monthly turnover of exchange, etc. How are the assets increasing? Why is it coming into really in the media these days? Because of multiple accounts being solved. You will get to know a lot once you go through the report. I am sure you would have further doubts also, and we have shared, we have put a contact point specifically for gift as of now. And you also have your relationship manager or wealth managers who you interact with. They would also know. So you have your contact points already. I understand that this might require some kind of further understanding also. This report is being very well acclaimed by all the NRIs who have read till now. And I hope that it is of help to you guys as well. Yeah, I think, and we'll keep doing and all such queries, understandings, and I can see a lot of people giving us good suggestions also. We would really want to take such things in future as well. I hope this webinar actually proved to be something useful for you, as our users. And if it really proved helpful, I would really want some kind of appreciation across our platforms, wherever you want to give it, either to our wealth managers or to our app or Play Store, App Store, or on chat here. But we'll keep trying, we'll keep focusing on what we are trying to build here and simplifying investments of NRIs for NRIs into India. With that, thank you, Shreyas, thank you everyone from Motilal's team. And we'll keep doing that for better understanding both from investing and taxation perspective. From SBNRI, signing off. Thank you everyone.
Thank you, Mudit, for inviting. Thank you, everyone, for listening in. And love to interact with you in the next session.
Thank you everyone. Cheers.